All right, good evening, everybody. All right, now, so thank you very much for joining me. This is Portfolio Cash on Fridays with Terence over here. If you are already live together with me right now, please drop a comment, say hi. All right, let me welcome you in person. All right, for joining me once again on a Friday night. All right, now, so it's really awesome to have the same people, right, who have been together with me on this amazing journey for more than a year, live every single Friday. And of course, I look towards continuing to do so and to add more value, all right, to all of you who are dedicating this time slot, all right, that you've given to me on Fridays. All right, now, hi, Anthony, hi, Alex, all right, and Facebook user, all right, we have you. All right, now, so if you could look at a banner over here, all right, I'm just gonna hide your comments right now. Look at a banner on the screen. It says streamyard.com/Facebook. All right, if you could go, all right, to the link, all right, and actually click on it, all right, or sorry, go to the link itself, type it out, all right, and then, all right, you will be directed to a page where you see a Facebook button, all right, just click on the button and your profile will be approved, all right, so the next time you leave a comment, I'll actually be able to know who you are. All right, now, Sharon, thank you very much. I'm doing well. I'm doing fine. All right, Eileen, hi. Anthony, hi. All right, and Florence. All right, now, so let's get this session started, shall we? All right, now, so this week, all right, I actually plan to add quite a couple of positions. All right, yes, market is in turmoil, all right, but it's good business for all of us over here. Right now, so you see the portfolios on the screen, right? We do have some positions we are doing well, right? We may take them off today, all right, but before we go to that, all right, let's start off with the usual, okay? Right now, so I'm going to start off with the market update and what I see in the markets right now. Right now, so many people are fearful of the war, right? But I'm just going to tell you right now, all right, I really do not see, right, one of those 1,000 point crashes that are on our way, right? Barring a real. All right, hey Jason, all right now, so it was you, all right now, great to have you here as well, all right. I do believe that StreamYard kind of reset their servers every now and then, so it seems to do so, all right, to some Facebook accounts, all right now. So yes, as I was on the part over here, right now, I really don't see, all right, markets having those 100 point drop days on the SPY, which equivalents, right, to 1,000 point drop on the index right now. So you may be asking me, Terence, how are you so sure? How do you see this? Right now, because right, if you go look at accumulated distribution kind of indicator, right, it kind of tells you is money going into the market or is money leaving the market, right? You can actually see what's happening over here, right? We do not see money as exiting the market, right? So even today, right, look at today, we have a gap down, right, on the index, right? But money is not leaving the market as yet, right? Okay, now, so without money leaving, right, now you won't get those ultimate sell-off. Now, why? All right, because for a 1,000 point drop, all right, it has to be a market that's like a vacuum. Right now, when I say a vacuum, means all sellers, no buyers. All right, but you can see from this indicator over here, there are tons of buyers who are still willing at the moment to buy the dips right now. So why would you say, hey, Terence, why would there be buyers who are willing to buy the dip? Very simple, right? That's because the long-term upward trend, right, has not been broken yet. All right. Okay. So as long as the longer term upturn trend, right, has not been broken yet, right, these algorithms, these fund managers over here, they're going to continue to do what has been working for them. Right. They have not felt the pain. Right. They have not been burned. Right. So they're just going to keep doing whatever they've been doing. Right. Because it's worked for them very well. Right. Over the last 2 years. Right. So every time the market dips, right, they're going to put some money to work. All right. Now, so they're going to look for things that they can park their money into. All right, so they're going to support the markets over here, right, until, all right, things turn around. All right, so because of that, right, because there's someone always supporting whenever there's a dip, right, you can't really expect the market to go crashing. Right now, do we have our, potential events, right, that may cause this? Yes, there is. All right, okay, but I really don't think, all right, it's going to happen this time around. All right, now, so with that said over here, all right, what do I see? What do I expect in the markets? Right now, as you can see over here, a lot has happened. Market has been quite volatile since the start of February, right? Okay, but despite that, all right, it has pretty much still held within the zones. Right now, what you see are the lines that have been drawing, all right, since the end of last year, all right, okay, and until now, these lines have still held over here, all right? So, it seems like it's done a lot, but literally it's done nothing, all right? Because if you look at where it is right now, right, from October, all right, where we had the last correction, all right, until today, all right, you can see that, the SPY, the SPY, is actually at the same point. Yeah, all right, now, so we kind of have this at the same point kind of thing over here, all right, where, if you look at it, all right, from October to now, all right, what is it? 4 months later, all right, we can literally say that the market has gone up, gone down, but it's literally gone nowhere. All right, we are back to square one from 4 months ago. All right, now, so what's the difference over here? The difference is, all right, that we see a lot of the high flying stocks, right, suffering in this sell off. All right, the tech sector, which has been doing really, really, really well, all right, has been the one bearing the brunt of this correction move. Now, so of course, is there a reason behind this? There is, right? Because of inflation that's happening, because of the potential threat that interest rates may actually be rising, right? And this is actually always bad for technology stocks, right? So the lack of cheap money, right, is never good when it comes to technology stocks. Yeah. Okay. But Terence, right, the technology stocks have sold off. All right. Why isn't there a deeper correction in the market? Very simple. Because the financial sector has held up. Right now, so what you're seeing right now is the QQQ, which represents the technology, right? But right, if you really look at the XLF, which is the financial sector, right, you would see that it actually held up. Yeah, all right. Now, so because of this, right, the financial sector actually represents up to 30% of the S&P 500 index, right? So what you have is like a jigsaw puzzle, right? You have one major dominant factor, which is the big tech companies, right? Big on the market cap that is going down, which is selling off, right? But then you have the financial as a collective, right? All the banks over here, the bank stocks, right, which are balancing, which are holding steady, all right? Okay, that's holding up 30% of the market, right? So yes, it's coming down, right? But it's not a severe sell-off. Yeah, all right. Now, so that's what's happening right now. And I don't really see any much changes, right? But I did say at the beginning of the year that this year, right, this year is going to be one of those value-driven years. Right now, and I am at the moment still pretty spot on. Why? Because the ones that have been overvalued, right, have been seeing some kind of a sell-off, right? So any company right now who is unable to prove or turn a profit or show a profit has been punished, right? Okay, many of these stocks, the red hot stocks, right, the innovation stocks have been punished, right, since the start of the year. Right, so you see your Pelotons, you see your airline companies, you see all your Dash, right? You see the lifts, yeah, all right. All these companies, the new gig economy, all right, that many people call the tech unicorns, right? As long as these companies have not proven or managed to show a profit in the last 2 years, right, they have been punished since the beginning of the year. All right, now, so that's the theme of the market right now. Okay, now, all right, if you want to put your money in a safe sector, right, you need to find the deep value. Right, so the deep value over here is where you need to park your money, right? Because these are also the areas where it will provide you safety, right? Even amidst a market sell-off. All right, now, so we do have some positions in our accounts over here, right? So let's quickly go ahead and have a look at them. All right, now, so we do have our VZ position. All right, so we have our VZ position over here, all right, where we still hold the $55 call option. All right, this expires in about 2 weeks from now. All right, okay, and all right, the stock right now is coming close to that. All right, if you look at the left side of my panel, you see that today, all right, VZ is trading at 54.72. All right, 54.72. All right, so we're nearly there. All right, but no action is required from me. All right, so this is the reason why, all right, I actually, do love setting up a portfolio like that. All right, especially for those of you, right, who are not part of our trading membership community. All right, why? Because you can see, right, that I'm not literally very active, right, by being live together with all of you on Fridays. There are weeks where I just add on one trade. There are weeks where I don't even trade at all, right? And many a times my portfolio is never fully exposed as well, right? Okay, and despite that, right, the portfolio is still able, right, to churn out a double-digit return, all right, on an annual basis. Right now, if you imagine that, right, this means, right, that by managing my own capital, right, I'm still better off, right, than parking it in the hands of some professionals, right, okay, in the financial institutions, right now. So this is definitely some food for thought over here, right? If you, if you have always thought about it but never believed that you could do this, all right, I'm proving it to you that anybody can, yeah, all right, anybody can, all right, okay, as long as you know what you're doing. Right now, so before I go ahead and talk about any further trades over here, please let me make sure that you see the banner scrolling at the bottom, right? Which is the standard disclaimer. All right, pardon me, I'm in an air-conditioned room, so the air is a little bit dry. All right, okay, now let me take a sip of water. All right, now, so let me get going again. Now, so where was I? Yes. All right, a disclaimer, I will be discussing live trades. I will be talking about trades that I'm looking to add on to my portfolio or close them out. Right now, so by all means, please be aware that these are not in the form of any recommendations at all. All right, okay, they are just my personal portfolio actions. Right, please be aware that all trading investments bears a risk of loss. Right, so you should be aware of all the risks involved before you decide to follow any of these trades in your own personal live accounts. Okay. All right, now, so that is out of the way over here. All right, and let me get going. All right, now, so no actions on VZ right now. Let's go to our next one. All right, we have eBay. All right, now, so we have eBay where we took the stock last week. All right, and this week, all right, eBay is sitting at $54. All right, now, so let's see if we've got some kind of a recovery on eBay. Right now, not really. Right, eBay has been a non-mover over here. Right, but you do see that it's starting to stabilize. You do see that it started to move into what we call consolidation mode. All right, okay, which means right that the sell-off, all right, or the sellers have stopped selling. Right now, so this tells me, right, that I should be a little bit more patient, right, to wait for that reversal up move. Right, so yes, I do want to add a call option, right, and collect some premiums, right? But I do feel that the breakout may be just around the corner. So I want to wait for that to happen, all right, so that I can collect some better premiums, right, when choosing the call options to sell. All right, so with that, all right, I'm not going to take any actions on eBay today. I'm just going to keep holding the stock, right, which I paid $60 for, right, on the expiry of the 18 Feb option. Okay, all right, so no actions on eBay over here. Right now, we have one smaller, okay, I can't call it small, right, but a one contract size trade on a Facebook May put option with a 230 strike. All right, that's definitely underwater, right, but it's not as though we have not been in this situation before. All right, okay, the company is still churning profits, right, but the company is in a phase of what we call a lost identity. Right, it doesn't really know where it wants to be. It doesn't know if it still wants to be called Facebookers or it wants to be called Maters. Yeah, right. Yeah, all right. Okay, and that is definitely hurting the stock price. All right, but all right, it's not hurt your bottom line yet. So that's always the key. All right. Okay, so once you can get this sorted out, all right, which we still have time, it's about 2 months away. All right, and a little bit longer. All right, I do believe, all right, that this position is still pretty strong. All right, so no actions on this as well. All right, now our next one over here is Pfizer. All right, we have Pfizer, which expires in 2 weeks' time, a $50 put option. All right, now where's Pfizer today? Pfizer is trading at 48.35. All right, now so let's have a look at how much the premiums are. All right, now so if we go to Pfizer, all right, 48.35. $50 puts. All right, okay, it's only trading. All right, look at this, everyone. All right, we do actually have a profit. All right. Oh no, I'm at the wrong stock. My apologies. All right, I haven't changed the stock symbol. No wonder I thought it looked very weird. All right, here we are. All right, there we are. $50 puts. All right. If you close it today, you would have to pay about 236, 238. All right. So we're slightly underwater by about $1. All right. But Pfizer, all right, if you notice over here, is deeply undervalued. Right, so I'm more than happy, right? And of course, with this pandemic that's going on, right, it is promised, right, that Pfizer, right, is definitely going to churn in billions of dollars of profits, right? And the best part is this: Pfizer is not a one-trick pony, right? Pfizer has a whole slew, right, of medicinal drugs, right, that is pushing, that is selling on a day-to-day basis. Right. Okay. So, profitability wise, right, this is like the Intel of the medicinal field. Right, so I have no worries, no qualms about this. The market doesn't love it. That's okay. I love it very much. Right, it's making money. Right, it pays a dividend. All right, the dividend is worth 3% right now based on the stock price. What's there not to like? Yeah. All right. Okay. Now, so what's there not to like? All right. Now, so I'm holding on to this position for the next 2 weeks. All right, and let's go to the next one. All right, our long-term favorite over here, Intel. All right, so we have Intel, a $46 put, which we have actually just put back. All right, last week. Yeah, all right, we just put it back last week. All right, so we have a $46 put, which expires on the 18th of March. All right, let's see where we are at today. All right, it's worth only 75 cents today. All right, now, so we do have a profit on this, but like I said, all right, Intel is a great stock, all right, it's not moved up by much, so I'm going to hang in this to this position. It's profitable, but I'm hanging on to it. All right, our next trade over here is on Himax. All right, okay, we established this last week as well, a $11 put, which expires on 18 March, that pays us 70 cents. All right, now, so let's go to Himax over here. And we do have a profit. All right. Okay. The stock didn't really move. All right. You can see it's still $11. All right. And barely surviving. All right. But we can probably close this trade by even paying 55 cents today. All right. So we do have, a slight little profit. All right. But I do like the undervalued nature. I do like the fact that it's even capable of paying a dividend, which means the company believes in its capability of being profitable. All right. So no qualms about this. All right. I'm keeping on this to this trade. Now, last one. All right. We did open a Tupperware position last week. All right, and right, it made a move, right? So I do believe we can close this off today, all right? So this expires on the 14th of April, all right? A $15 put where we collected 95 cents, right? So let's quickly go ahead and have a look at it. All right, now it charged up to $19, everybody. All right, so we're gonna take our profits. All right, a $14 put. Look, everybody. All right, now, so it's 5 cents and 50 cents. Oh my God, 5 cents, 50 cents. All right, now, so no, we have the $15 put over here. All right, now, so $15 put is 25 cents, 35, 25, 40. All right, so I'm going to go ahead and close this for 35 cents today, everybody. All right, so let's go and pay 35 cents and get this trade closed. All right, hang in there. All right, let me go ahead and place the closing order. There we go. All right, we have an immediate fill on this. All right, so let me just drag it across. All right, and you see it. All right, now, so I've just closed Tupperware over here, the $15 put. I bought 3 of them back at 35 cents. All right, now, so that's done and dusted over here. All right, so let me put it on. All right, now, so let's wrap this up. All right, before we go to the new positions for tonight. All right, now, so we made 60 cents premium, right, on a trade where we give it 7 weeks. All right, so I collected 60 cents, right, or 2/3 of the profits that I slated, right, to make in 7 weeks. All right, and I got 2/3 of it in 1 week. All right, now, so is this a great decision? All right, leave a comment and let me know. All right, hey Jimmy, all right, never too late. All right, as long as my session is not ended, you're not late. All right, let me know. All right, if this is a good decision when it comes to making it. Today is what? The 4th? Yep, today's 4th. Right, so we just collected $180 in cash flow, right, in just 1 week. Right, this is a 1 week job over here. All right, so I think it's a pretty good return. All right, now, so all good over here. All right, now, so that's a good trade over here. All right, and if any of you did make this trade together with me last week, all right, it'd be really awesome. If I could see you leave a comment, all right, inside the Facebook live session, right, to let me know about it. All right, it's always nice to celebrate it with any of you who have dedicated your time, right, to be with me on Friday, right, and knowing that I help you make some money as well along the way. Right now, so Tupperware is closed. All right, and we are what, $90,000 exposed, all right, on a portfolio right now, which is worth $122,000. All right, now, so I'm definitely looking to add today. All right, now, so what stock am I adding today? All right, now, so today I am going, hang on. All right, everybody. Now, so today I'm going with deep value once again. All right, now, so what deep value do we still have in the market, Terence? Is this even possible? Yes, it is. All right, now, so today, oh well. All right, so we do look like a Facebook. We have a Facebook user who's not with us. All right, now, so I can't avoid this right now. All right, I'll remove it later on. All right, but please be aware. All right, and yep. All right, I'll do it after the session. Okay. All right, Desmond, congratulations. All right, now, so really good. All right, really awesome to hear about this. All right, awesome, Desmond. All right, now, really, really awesome. Okay, all right, Pangsin, no worries about it. All right, we get into new trades this week then. All right, now, so if you're comfortable with it, why not? Okay, all right, now, so today I'm going with another deep value. All right, I'm going with Walgreens Boots Alliance, everybody. All right, now, so Walgreens Boots Alliance, it is trading at 6 PE. All right, now, so why do I say this is deep value? All right, very simple, because the 5-year average is trading at 14 PE. All right, okay, now, and not only that, right, this company, all right, okay, this company is actually growing. All right, okay, now, so it's growing, it's, how do I say this? All right, it's growing its ROE over here. All right, now, so I do like the ROEs. All right, I do like its profitability. All right, now, so I do like what I'm seeing over here. All right, okay, now, so that's all good with me. All right, and let's look at what has happened with the charts. All right, now, Walgreens has suffered. All right, it dropped from $55, right, all the way down to 45. Right, so this is a good thing over here, right? Because as long as the market doesn't like it, that means we can find value. Right now, so is there any worries about the profitability of the company? No. All right, no. Why? All right, now if we look at its recent earnings, right, the estimate, right, came in at 135, right, but the company actually reported 168, right? So the report was actually better, right, than what was estimated, and yet the market sold it off. All right, now why? Don't ask me. Don't ask me. All right, market just like red hot stocks, right? They don't see profit stocks right now, right? But if they don't, then it's our job to do this. Okay, now, so let's see what trade is available for us. All right, now, so I want to go, let's see. Oops. All right, now I'm going. What should I go with? What should I go with? Let's see. Yeah, Andy, definitely. All right, and because market is irrational, right? As long as we can rationalize things, right, it is definitely working to our advantage, right? But of course, right, if you don't know what you're doing, right, then it's not going to be any good after all, right? All right, everybody. All right, now, so I've just gotten a trade over here, as you can see. All right, I've decided to sell the April $45 put, right, and I got $1.60 for it. All right, now, so I just got filled at $1.60. All right, okay, now, so here's the verification, right? 1023 on the platform over here, right? So the platform timing, all right, okay, the WBA April 14 puts, 45 strike, all right, so 3, right, at 160, all right, so this is filled, all right, now, so let's get this recorded down. Right, so let me copy and paste, right, trade 95, right, on Walgreens Boots Alliance. Right, for the 14th of April, right, this is the 45 strike. I did this on the 4th of March. So today I collected 160. And this is gonna pay me $480 in cash flow, right? Not too bad, right? I've added $480 worth of cash flow today, right now, and that's gonna put $13,500 deposit into my. It's gonna take off $13,000 from my cash flow, right? But let's look at the returns on this trade, okay? Right now, so I'm gonna get paid 160, right, on an investment of $45 a share, right? Do remember the focus strategy is the portfolio puts. Yeah, all right, okay, portfolio puts, all right, so we're taking advantage of it. So this trade pays me 3.56%, all right, in how many weeks? Let's look at it. It's what, 41 days? So I believe that's 6 weeks over here, all right? Now, so if we divide this by 6, right, it's the annualized return of 30%, right? So definitely good, all right? More than good enough for me to take this, all right? So it's taken, all right, it's added to the portfolio, all right? And, all right, I do want to add a second one. All right, now, so yes, all right, I like it. All right, now, so I do want to add a second one over here. Right now, so when, right, adding a bullish position, right, there is something that all of you should be aware of. All right, it is always better, right? It is always better to add into a bullish position, all right, okay, on a down day, right, on a down day rather than an up day. All right, now, so today, another deep value stock I'm looking at is Abercrombie and Fetch. All right, okay, yes, I do believe we have traded this before, right? But it had disappointing, the stock had disappointed, right, in its recent earnings, right? And, right, this gives me the opportunity to get back in, right? I believe we did a trade somewhere over here, right? Okay, and then it started running up, which was good for us, right? We got out of the trade with a profit, right? And because of earnings, is dipped back below, right? So I'm going to take advantage of this. Why? Right? Because earnings ain't that bad. Look at it, right? Yes, it missed by a little bit, right? But the company is still profitable, right? If you look at it, the company is profitable, right? And the company is trading at a 6 PE, right? 6 PE. Yeah, right now. So I'm going to take advantage of this, right? Market sell off over here, right now. So this one, all right, we have rich premiums, all right? So let's see if this trade works out for us, okay? Now, if I target the $27 puts for 14th of April, I'm going to look to collect like what, 130, right? Let's see if the ROI makes sense first, okay? Now, so if I collect 130 divided by a 27 investment to buy the shares, that's 4.81. It definitely is going to work out, right? So that's the trade I'm going after then. Yeah, right. So simple does it. If you know what you're looking for, right? If you know what you get out of the stocks, right? You can actually make a decision, right? Really, really, really quickly. Yeah, right. Simply because you know exactly what you're doing. Right. So let me load up this trade over here. All right, there we go. All right, now, so ANF, right, April 14, 27 puts. I've sold 3 of them over here for $1.30, right? So that's done and dusted as well, right? Now, so let's go ahead and record this as well, right, inside our official portfolio, right? So today I closed 1, but I added 2 positions back, all right? Now, so trade number 96, right, ANF, right, 14 April, $27 puts, right, and 130. Right, so this is going to pay me $390. All right, now, so today we collected over $800 in cash flow, right? 870. Right, so I'm all happy, right? 870 in what? Less than half an hour's work, right? And this trade only cost me 8,001. Right now, so my total capital use right now, right? Okay, committed, basically committed, right? It's 111,000. Right, so I'm nearly 90% exposed right now. Right, I'm comfortable. Right, as you can see, I'm 96% exposed. I'm comfortable. Yeah, all right. Now, so you need to know what you're doing. All right, okay. And as long as you know you're going with deep value stocks, all right, okay, you can't really go wrong. All right. Plus the fact that I've already allocated all the capital that's required, right, to buy up any of these shares. All right. Okay. Now, so that is it. All right. Now, so Pang Sin is asking me AMD. Right. So Pang Sin, all right, let me just show you AMD. What about AMD? All right. Now, tell me about this. All right, now, Pang Sin, all right, very quick question. Let me teach you something in just 5 minutes. Right, who's AMD's biggest competitor? Right, I know there's a little bit of a lag over here. All right, now, so I'm going to just give Pang Sin a little bit of time to get back to me. All right, good. Thank you very much. So Pang Sin is saying AMD's biggest competitor is Intel. All right, now, so next question, Pang Sin. All right, who has the bigger market share? All right, does Intel has the bigger market share or AMD has the bigger market share? Thank you very much, Andy. All right, it's definitely Intel, and not just Intel, but way, 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 way bigger. Right, it's like David and Goliath, right? Yeah, right. One big chunk of the market share versus a little chunk over here. Right, and yet, right, the one that has the little chunk, right, trades at a 42 PE ratio, 42 times of its earnings. Right, 42 times of its earnings. Right, and then when you look at Intel, right, this Goliath is trading at a 9 PE. Right now, so Pang Sin, think about it this way. If you really want exposure, right, you want exposure into this sector, right, which one seems like a better value? All right, which one seems like a better value right now? All right, and not only that, if you think of the entire marketplace as a whole, what is the market doing right now? The market is selling companies that are richly valued. All right, now, so do you really want to get into a richly valued company, all right, in midst of a market that's behaving in this manner? Yeah. All right. Okay. Now, so I hope that brings a light to your attention over here. All right. And why, all right, I would have never ever traded, all right, AMD. Okay. Now, so let me see if I can show you this, right, in the form of its books. Okay. All right, now, so AMD has increased its profitability over here, all right, but you must bear in mind, all right, that it is very cyclical. All right, now, why do I say it's very cyclical over here? Why? Because AMD, all right, is very reliant on that one good chip. All right, yes, you must understand it's reliant on that one good chip. Right, if it is able to prove that it's produced one chip series that's way better than Intel, right? Yes, it's going to take a lot of sales away from Intel for that one chip, right? But Intel is never going to take it lying down, right? So Intel is going to come back with a fight, all right? And when Intel wins that fight, right, AMD is in trouble again. Yeah, all right now. So this is like a never-ending fight where AMD has to continue to spend so much money, all right, just to beat out Intel. Right, and yet, even when they beat out Intel, they still can't chip off the big chunk of Intel's market share, right, in this business sector. Yeah, right, and that's the problem I have with AMD. Right now, if you need to get into AMD over here, right, this is right where you should be getting in. Yeah, all right, okay, not even here. All right, I need to go way back over here. All right, this is where you should be getting in over here. All right, not here. All right, okay, now, so Pang Sin, you are saying, yes, it's going sideways over here. All right, now, so let me remove my, all right, now, this seems like a support level. All right, Pang Sin. All right, now, so you may be thinking of trading based on this, right? But you must also be aware, right, that if this level is broken, all right, okay, the stock can go all the way back to $75. Right? Are you ready to stomach that kind of a risk? Right? So that's the issue over here, right? If it doesn't break, all good. But what if it breaks? All right. So sometimes, all right, when it comes to the stock, right, you have to compare the risk on the downside, right, versus the potential risk, benefit on the upside. Yeah. Okay. All right. Now, so yes, you got that right. You got that right, Andy. All right. Now, and if you have a problem with anti-monopoly laws, it's a good problem. You must understand it's a good problem. All right. Okay. It's a very good problem. It means that you're in such a controllable position that you should like the position you have. Yeah. Okay. And that's definitely not visible in AMD over here. Yeah. All right. Now, so definitely, right, in this chip sector, I'm never gonna go near AMD. All right. Definitely not near. All right. Okay. Now, so welcome, Bang Sin. All right. Now, I hope that helped you a little bit over here. Now, so that is right. That is pretty much what I'm gonna do with the portfolio today. All right. Now, so we have taken off Tupperware. All right, okay, and we have added some position back into the mix over here. All right, so Rio, we are out of this as well. All right, definitely not a time to get back in. All right, so yes, all right, that's pretty much it. All right, now, and if you look, right, the market is down 65 points today. Right, and we have these deep value stocks. All right, some of them which are still performing well. All right, so we have eBay that's bucking the trend today. All right, we have WBA that's bucking the trend today. All right, so why the hell not? All right, why the hell not? I'm more than happy. Yeah, okay. All right, now, so Micron. All right, now, so what do I not like about Micron? I don't like the valuations. Not so much the PE valuations, all right, but I just don't like what I see over here. Yeah, all right. I just feel, all right, that's still a little bit hefty. All right, the pricing is a little bit hefty. All right, and all right, Andy. All right, okay, Andy. All right, just quickly on the screen right now. All right, you would spot a potential problem. All right, with Micron. This is the weekly chart. All right, and can you see where's the money flow going on the weekly chart? Money's getting out. Facebook user. All right. Okay. Now, I don't know who you are. I don't know how to address you. Right. But you must remember. All right. Okay. This portfolio that I'm building right now is based on option selling. Right. So I'm not looking at the growth upside. I don't need the stock to go up. All right. I just want a stock that doesn't crash and burn. Right. So the key right now is, right, who has a bigger risk when it comes to crashing and burning. All right. Because yes, I do understand that AMD has a bigger growth. Right. But then when it comes to growth stocks, when it falls out of the liking, all right, okay, you won't like to be in the stock. All right. Because can you see what has happened? Right. This is Tesla. Right. Everybody loves Tesla. Even at $1,000, everybody loves Tesla. But how about it when it's at 800? All right. You can still go and shout, right, that it has more room for growth. Yes, I agree. All right. But you won't like it, right, when it's not being liked by the market. Yeah. All right. And that's the problem. Right. That's always the problem. Right. Because when you're late into the game of buying into a growth stock, right, that means, right, that the move or the valuation paid for the growth potential has already been priced in. So you need to be very clear. Are you late? Right? Or is there still time for you to get in? Right. So that's the thing you need to be, very, very clear about. Right. So if you have done the legwork, by all means, right, vindication, go ahead with it. Right. But I don't study AMD much as compared to Intel, which I've been trading over a decade, all right, on that company. So I'm definitely going with what I'm comfortable with. Yeah. Okay. So just as I highlighted over here, this is the risk with AMD. It is trading right at the support level. So if it breaks, right, I'm looking at a potential fall all the way to $70. All right. Okay. And that's not something you're going to be liking. All right. If that actually happens and you're in a trade on that stock. All right. But look at Intel. Right. This is the same weekly chart. All right. Look at Intel. Where are we right now? Right. Where's the risk on the downside? All right. So can you see where I'm coming from over here? All right. Okay. Now, so it is not just looking at the stock itself. All right. Okay. But right, it's looking at the potential, right, of the downside risk. Yeah. Okay. Potential of the downside risk. Yeah. Okay. All right. Now, so let's go back. All right. Now, you're insisting that there is another support level at 100. Right. Yes, there is. Right. Yes, there is. At about what? $98. Right. But still, right, that's another $15 drop from where it is right now. That means it can fall by another 15%. Right. Now, and with that, you must understand the next thing. All right. Look at the trend right now. Right. That means the EPS trend for AMD has been growing. Right. Has been growing. Right now. So the next thing is when a company is in this phase, that means every time, all right, is reporting a higher earning. Right. And this is going to become an expectation, right, of what is to come for the company. Right. And if it starts to plateau and turn the other way, oh boy, right, that $100, right, is gone within a day. All right. And that's the issue over here. All right. Okay. Now, so all I'm saying is this, right? If you want to invest in growth stocks, you got to have a bigger risk appetite. Right. And that's definitely not what I want with this portfolio that I'm doing, all right, with all of you on Friday. Right. So just different objectives, right? Different objectives over here. Yeah. All right. Now, so I hope that helps you over here as well, right? To understanding the markets, all right, and how to navigate around risk a little bit better. All right. So I'll deal with Andy's last suggestion over here. Right, and then we'll call this session to an end. All right. So GILD. All right. Now, so GILD is trading at 12 PE right now. All right, versus a 5-year average of 15 PE. So it's slightly undervalued. All right. Now, so let's look at what we have. Yes. Yes, this is possible. Right? This is possible. Right, Andy? But if you want to go ahead, you can look into this. Right? But for my issue over here is I'm already 96% exposed. Yeah. All right. Okay. I'm 96% exposed. So I'm not going to add further into this. Okay. All right. Now, so Facebook user. All right. Now, so thank you very much. All right. Now, I just hope you see, right, what I'm trying to put out in terms of the full picture to you. All right. Okay. What you expect out of a stock has to fit into how you trade it. All right. And my way of trading it, right, is not looking for the upside potential. Right. I'm looking for stocks that has a lower risk of crashing and burning. So when it comes to AMD versus Intel, you can clearly see just now, right, that Intel definitely gives me much lower risk. Yeah, right, and that's why I'm getting into it. Yeah. All right, now, so Andy, you have an Intel that's going to expire in 18 months. Congratulations, right? That's all good as well. All right, now, and I'm always happy, all right, always happy to see, when you're getting into trades, all right, and making some good money. Right now, so with that, all right, I'm going to end today's session over here. Thank you very much once again for being together with me. All right, before I end the session, all right, I'm always going to seek your help. Right, if you enjoyed what I shared today, if you learned something from the session today, please help me click the like button, right, on the Facebook feed itself. Right, please help me share out the videos and reach out to your friends, right, who are on Facebook as well, right, who are keen to learn about how to build their portfolio, right, and get themselves some cash flow as well from Mr. Market. All right, now, so with that, I will end the session officially over here. Thank you very much for joining me once again. Have a great weekend. All right, I'm in and scheduled for a full day mentorship tomorrow with my trading members. Right, so if any of you are keen, right, to develop your option selling skill set a little bit further, all right, and use less capital, right, for the same kind of trades on the stocks, all right, please contact my team. Please contact my program manager, right, via email on the mentorship programs we have available. All right, now, so this is Terence Tan signing off, right, on Portfolio Cash on Fridays. Okay, everybody, all right, bye for now. See ya.